The following is a presentation of TFNN.
11 seconds. You've got 10 seconds. The countdown going on right now. Morrow up to Schultz. 5 seconds left in the game. You believe in miracles? Yes!
Let's go to Ilka in Boston. Ilka, thanks for calling. Thanks for holding.
How are you?
I'm doing wonderful.
Steve, seriously, you guys are unbelievable. You are doing wonders for all the traders.
Well, thanks. We appreciate that.
The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the November 11th magnificent Monday Veterans Day edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that's what it's all about. So let's go look at one of our tools. This is the tool I call happiness is a byproduct. You know, the Constitution of the United States says that every person is entitled to life, liberty, and the pursuit of happiness. Now, many of you may be familiar with that old adage, we are born to be happy. And many of us, well, the primary goal of life seems to be the attainment of happiness. It must be an innate knowing that our purpose in life is to be happy, because the majority of us seek happiness with all of our hearts. Sadly, though, some seek happiness outside of themselves, much like the search for the Holy Grail. Now, take a moment and observe others. What I find is that the happiest people seem to be those who are working to give happiness to others. And the reason is because happiness is not found by seeking it. Instead, it's a byproduct of helping others. So if we all seek happiness, and happiness is a byproduct of helping others, what did you do this weekend to help others? Better yet, what are you doing today to help others? You see, it doesn't matter who those others are, and I'm willing to bet that if you take a moment to reflect, it made you happy when you did help others, whether it's already today, over the weekend, at some point in time. And sometimes people struggle to figure out what it is that they could do to help others. And if you fall into that category, try this or answer this question. What is it that you like to do? What brings you the greatest joy and fulfillment in life? Write those things down on a piece of paper and then ask yourself, are these the things that will fill your day today? Are those the things that will take up your time? If so, I'm betting that you are probably a happy person. And it is in these things, well, folks, it's those things that you need to really share with others. If you need more happiness in your life, but just push that happy button. It's those items you just wrote down on a piece of paper that will make you happy. Remember, you become more by doing more. Happiness, well, it boils down to becoming the person you want to become. It's not about what you have. It's about who you are. So each day, put yourself in a state of mind where you ask yourself, here is an opportunity for me to celebrate like never before. And with my power and my ability, I can and will get myself to do whatever is necessary. Folks, that is the state of mind you should put yourself in each and every morning. Let's go check out the state of mind of these markets here right now. We've got Dow futures. Well, they are flat, trading out at 15,700. ES Mini, that's flat, trading out at 1766. NASDAQ futures down 4 points, trading out at 33.56. King dollar back 20 cents right now, trading out at $81.19. The euro is up this morning. We'll take a look at that. Goldilocks back $1 right now, trading out at $12.83. Silver is up 6 pennies, trading at $21.38. Light sweet crude trading out at $94.26. That's off 34 cents this morning. Natural gas up about a penny and a half, trading out at $3.57. Our call number 877-927-6648. give us a call. Would be happy to take a look. I'd be happy to help you out. Take a look at a stock chart, anything you'd like, and together we can try to answer whatever question it is that you are trying to solve. If we take a peek around the globe here, last night over in Asia, you had the Nikkei up 183 points, a little over 1%. Well, actually a point and 1.3% out there. The Hang Seng up 1.4%. That was 325 points northward. The Shanghai was up 3 points. That was basically a flat market out there. Over in Europe this morning, the DAX is up 17. The FTSE also up 17 points out there. So, hope everybody had a great weekend. For all of you veterans out there, thank you so much for the service that you have provided to each of us out here. I hope you just simply have a fantastic, marvelous, incredible day out there. You absolutely deserve it. Let's go check out these markets. Let's try to make hay out of what's going on in a flat market out here. Flat market. Well, let's just take a look at the ES Mini, try to figure out where it is that we're at. The ES Mini had broken through this consolidation zone. That was a 25-point consolidation. And we was really quite a waterfall cascade coming off of the 8 a.m.-ish time frame. That was on Thursday. What was it on Thursday? I think that was courtesy of Mario Draghi. We had the futures push up as soon as Mario Draghi cut the interest rates by about 0.25% out there. We then saw the market move all the way down in the bottom of the consolidation area, broke right through it, came back, tested it, rejected it, got back inside, rejected it again, made a move lower, and bam, on Friday, we got that little bounce. If you tuned in at 9 o'clock, I was suggesting do not short this market. We're going to see a bounce here. Now, it was a bounce a little bit more than what I had expected out here. I expected the bounce to come in and stop at about the 1763 level, and it sure looked like coming into the close that that's what was going to happen, because at 3:30, the market was actually, the ES Mini had closed out that session at 3:30 at 1761. I kind of shut down my computer and everything for the day. Thought I would go ahead and start the weekend early, which I did. And then, of course, when I looked at my phone at 4 o'clock, saw that the futures, ES Mini at least, well, the market itself, everything, the ES Mini had gone from 1676 all the way up to 1767 to went to 7. Hold on a minute here. Went from 1760, I'll get this right, to 1767. Big 7-point move in just a 30, and it wasn't really 30 minutes out there if we go take a look at an intraday chart out here. If we go from the swing point high, though, the one that came in courtesy of Super Mario all the way down to the low, that was put in here. And if you are watching us on TigerTV, thanks so much for doing that. If you're listening on the radio, your mobile device at TFNN.mobi, we appreciate that very much. Remember, you can always catch the archive of this show by going to the homepage of TFNN.com. Over on the right-hand side, you'll see a button, 3 little smartphones. You can click on that. You'll be able to see my charts here streaming. And what you would see here is you'd see that the 0.618 retracement, that's going from a swing point high. That's the one that came in at 8:30 in the morning last Thursday. That was up at 1774, down to the low that was put in. And a swing point is nothing more where you see a significant change in trend in the marketplace out here. We saw that change in trend in the bottom at 9:30 in the morning. That was on Friday out there, and that was at 1741.50. The 0.618 retracement level, my apologies, the 0.786 retracement level is at 1767. We're trading at 1766 right now. Came in with this wide-ranging bar here. That's the bar between the 3:30 and 4 o'clock time frame. You can see price has not really broken out of it one way or the other out there. And so in this case here, until it breaks out to the upside or the downside, it's just a sideways market. I'm not sure which way the market here is going to break. We're neither oversold nor overbought using the EKG of the market. And if we take a look at where is it going to bounce to, if it bounces to the upside, well, I'd say it will go test the top of that consolidation level that it has not broken out. So 1774.50, if we go ahead and we pull this back here, we've seen a consolidation in essence since October 25th. Today is November 11th. That's a pretty good consolidation out there. Some might even pull it back a little bit further than that. Some might say, hey, the bottom of the consolidation were the lows from Friday out there. And if we go ahead and we pull that back, you could get to easily to October 24th, maybe even to October 23rd out there. So it's a heck of a sideways move, consolidation move. And consolidation markets, folks, by the way, the most difficult to make any kind of money in. And what you really want to be able to do is you want to try to spot consolidations as quickly as you possibly. Well, it depends on what your trading style is. If you're looking to get in and get out of the market, then what you want to do is you want to be able to spot consolidation markets as quickly as you can out there. And the way to make money in consolidation markets are either to sell the tops or buy the bottoms. Remember, though, consolidations are typically going to resolve themselves in the direction that they came from out there. Percentage-wise, I know there have been studies out there. I personally have not done those studies, but the studies that I've read about say about 65% of the time, consolidations will resolve themselves in the direction that they came from. That being said, well, this consolidation was coming from a market that was moving lower out there, so we'll see if, in fact, that's the way that it resolves itself. It looked like when we saw the break of that consolidation on Thursday that consolidation was going to resolve itself to the downside. Now, I have to say, you know what? It's a little bit suspect out here, so we'll see whether or not the ES Mini can move up, test that 1774 range, reject it one more time. If it does, that would actually be a place from an intraday trader standpoint where you'd look to actually sell the market and play the consolidation pattern out there. Otherwise, there isn't much of a pattern to play. Now, if we go take a look at the Euro Japanese yen, you know that's my favorite currency pair. It should be yours as well out here. The Euro Japanese yen, we've seen a nice bounce here, or it has seen a nice bounce. Now it hit its first target area, its first objective. The first objective being the .382 retracement, the dead cat bounce. That's coming off of the swing point low from August 12th. That was out at 127.95 all the way up to the swing point high. That was put in on October 22nd. It was a nice 1.618 butterfly sell pattern. That means the first area to target was the .382 level. That was 130.83. But you always need to look at the left-hand side of the chart, identify where those swing points are because they mark a 100% move of a move on a way up or a way down. And that's what we really saw out here because the swing point was October 8th. We saw that the Euro Japanese yen made its way down into that area. Never really touched the bottom, but remember when you're taking a look at making a 100% move of a move, it doesn't have to be the exact high or the exact low. It's just a matter of trading into that swing point. Now what we're seeing here is a bit of a bounce. If we take a look at what that bounce is, well, it's at least the beginning of a bounce. If we take a look from our most recent swing point high, that would be October 30th, down to low that came in on November the 7th out here. You can see it's above the .382 retracement level. That says that it could easily move up to the .618 area. That's at 133.82. You're at 133.10 right now. If, in fact, that comes to fruition, that says that the ES Mini will go test that high out there. That says that we see a market that continues to bounce higher. Now, what the Euro Japanese yen needs to do, it needs to clear this body out here. And until it does that, that's the body of that big downdraft on Thursday out there. Until it clears that body, well, I don't know. But what I do know is I love being here with you. Thanks so much for being here, folks. 877-927-6648. And again, thank you to each and every one of you veterans out there. We appreciate all of your service that you have provided to each of us.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzamento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. You know, we were looking at the daily chart for the Euro-Japanese yen out there. I went ahead and flipped the switch. We went over, took a look at I've got the 30-minute chart on my screen right now if you watch this on Tiger TV. Now, this rubber band here, it is truly being stretched here this morning, and it has been inside of the really overbought territory since about 3:30 in the morning here this morning. And, you know, at some point in time, this rubber band is going to snap. Now, what's interesting about the 30-minute chart here is I'm showing this little descending price channel. So the question is this really a breakout or not out here? And, you know, I think that what we'll see is we'll at least see another test of the Euro-Japanese yen. If it can hold the top of this descending price channel while it works off that extreme overbought condition, then we might really see a breakout that is beginning. But right now, the way that this thing has stretched itself out here, it's questionable. And the Euro-Japanese yen, a great barometer to help to identify the trend of the directional trend of the market. Again, it's not something you can use tick for tick out there, but it is a great barometer as to what is going on inside the market. Speaking of the market, if we take a look at some of the other currencies out here, let's go take a look at the Queen, the euro. Now, what the euro did here on Friday was it broke the area of resistance. This is the daily chart. that we're looking at on the euro. We'll put the weekly chart up in a moment as well. But what we're looking at here is you see a black horizontal line. Well, you see a couple of them. I'm looking at the one that's towards the middle, the lower black horizontal line going across my screen out here. That's the area of resistance. Now, that area of resistance being set up not just by swing points, but by reversal candlesticks as well. That swing point being June 18th, but you had a nice bearish engulfing candle on the very next session out there. That sets up a bearish line of resistance. Now, when the euro got back up into that area on August 20th, and it was moving up on August 20th with a pretty nice wide-ranging bar out there. In fact, it was a continuation move out here. Continuation. Most candlesticks are reversal patterns. However, there is one, well, there's a couple of, there are several you can use as a continuation. One that is truly the essence of a continuation called a rising three or a falling three. In this case here, this was a rising three candlestick pattern, a nice wide-ranging bar, August the 15th, two small-bodied candles during the next two sessions, then boom, you got to close over that. That was on August 20th. That said that this should have been a continuation, but now it did continue into the resistance area, but quite frankly, it should have continued higher at that stage. That just shows you how strong of a resistance area it is, because you have the continuation pattern, and resistance was met with, it was stronger than that actual continuation. Now, you had a little bit of a, I won't really call this much of a bearish reversal signal here on the following trading session of August 21st out there. What the market did was just simply move sideways, made what looks like about a 0.382 retracement, and then finally got through that resistance area on September 18th. That was, I believe, courtesy of Uncle Ben Bernanke, but sliced through that like Kerrygold butter for sure. Went ahead and made your 1-to-1 A to B equals CD on the way up. That was at 138.02 out there. And now what we have seen is a pullback. Now, on Thursday's session out here, that level of what used to be old resistance now becomes new support. And it acted as support on Thursday, and then Friday just simply gave way. So now what we see actually taking place inside of the Queen is a test of that resistance level. So it is still a strong area. We're going to keep that black horizontal line on my screen out here. If, in fact, the euro just tests it, can't get back upside, what that says that the euro should trade lower. Where to? Well, if we just take a look at normal retracement levels, the where to, the minimum where to, is probably 1.3165 out there. That would then complete another 100%. Well, that would complete a 100% move of a move by getting back into the swing points of September 6th out there, and it would be your 0.618 retracement level. That is on the daily chart. On the weekly chart out here, let's put this up on the screen. Let's get rid of the retracement levels out here. We'll just clean this up a bit. What we can see here is that the euro on the weekly chart here has also moved down to that strong area of support, and that is the rising price channel. This is coming off of the lows back here in July of 2012. So a very strong area of support so far that is being held. And what this says to me, not only, in fact, if the euro breaks this area, will make that 0.618 retracement, I think what it will really do is move all the way down here to really the next line of support. And that's down at around the April 5th area, right around the 1.2814. Right now, very flat market when we take a look at the futures. We'll go see how this market's going to open. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com. It's that time of year again, and our semi-annual Tiger Dollar sale is back. For a limited time only, you can get a 25% bonus on any Tiger Dollar purchase, and included in your purchase, you'll gain access to an exclusive 4-hour live trading event with Tom O'Brien on November 19th called Strategies for Trading ETFs, a live trading event. The only way to gain access to this exclusive 4-hour workshop with Tom O'Brien, which includes live trading, is by purchasing Tiger Dollars as part of this promotion. Tiger Dollars can be used for any TFNN products and never expire, so now is a perfect time to get your 25% bonus. Don't delay, this will be our last Tiger Dollar promotion in 2013, so act today. For all the details and to get your 25% bonus on your Tiger Dollar purchase today while gaining access to Tom O'Brien's exclusive 4-hour online workshop and live trading session specifically on ETFs, visit the front page of TFNN.com today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow down 21 points, trading out at 15,740. S&P off 2, trading out at 1768. NASDAQ down 10 points, trading out at 3909. Russell 2000 down almost 2 points, trading out at 1098. Apple down $1 right now. Microsoft off 19 cents. Google down $6 and change out here. Leading the charge to the upside, Viro Pharma up $10, up 25%. Shire is acquiring Vio Pharma out there, so that's a nice 25% bonus out here. You got GoGo Inc., G-O-G-O, that is going. They going, I should say. They had a net loss, though, of $18 million versus $13 million from the prior third quarter revenues, $85 million versus $57.8 out there. But they are being rewarded this morning. Arkansas's best, ABFS, up 12.5%. That's up $3 and change out there. They had net income of $13.9 million versus $6.5, and revenues $623 million versus $577. You've got Voxel Jet VJET out here. That's up about 4% this morning. Rig out, that's up about 3%, up $1.50. Michael Kors, KORS, that's up about $1 right now. To the downside, Google leading the charge to the downside. off $6 right now. Zalicious, it's not really the name of the company. It's Zalicus, I suppose. ZLCS is the ticker symbol. And what the heck is going on with them? Down 72%. This must be a biotech company out here. Something. Let's see. Results from phase 2 trials of Z160 in chronic neuropathic pain company. Well, anyways, they obviously got a very bad report out here, down 72%. Yikes. Cirrus Logic, CRUS, down 13% this morning. That's a pretty big move. I don't see any earnings behind that move out here. First Energy, losing a bit of energy this morning. It's off about, FE is the ticker symbol, down $1.63. LinkedIn down $1.58. Tata Motors, TTM, they're off about 4.5%, down $1.40. Again, our call number 877-927-6648. Give us a call. Let's see. We took a look at the currency market out here. Let's go finish it off. Let's take a look at, well, I don't know if it's necessarily finishing off, but let's take a look at the Great British Pound here. Still traveling in the sideways consolidation box out here. Looks so far, let's see, take a look at the retracement off of the bounce. I don't know whether this is trying to form an A to B equals CD up or an A to B equals CD down. Let's actually go see if we can figure that out. Let's look at the 30-minute chart. I don't think I have updated the 30-minute chart out here recently. So let's go see if that's giving us any kind of an indication out here as to, well, it looks like it's an A to B equals CD down on the 30-minute chart out here. That would say here on the 30-minute, let's go take a look at the pattern. There's our A point, our B point down here at 10:30 in the morning on November the 8th, and looks like the C point bounces about 5 a.m. this morning. That gives you a 1-to-1 A to B equals CD down at about $1.58, 1.586. Let's go take a look and see what the bottom of this range is out here. It's at 1.59. So an A to B equals CD down may, in fact, bust through the consolidation. So we'll pay attention to the Great British Pound, U.S. dollar. Let's take a look at what's going on inside the hard currencies out here. Let's look at Goldilocks silver. We'll look at the black light sweet crude as well out here. So here's the daily chart for gold. I think this one says it all. You can see the descending price channel. The tops, that's the red diagonal lines that you see on my screen out here. And right now, what we see here with gold breaking through, well, I guess we'd really that was really the price channel here, correction channel. Let me go ahead and also draw a trend line in here. We'll use the low of the trading session from June 30th out there. That's at the price level of 11.79, and the next touch point that I'm going to use is the next low that it made, which was October the 15th, out at 12.51. So it looks like gold is going to get down and test that level. Now, it came into the swing point from October the 15th. That had 110,000 contracts, and it got into it on Friday with 188,000. So you're coming into a swing point with some volume. Hasn't tested the lows, but does suggest that it should at least test the 12.51 area. Maybe we're starting to see a sideways consolidation inside of Goldilocks. We won't know till we see that low get tested or the top of that swing point get rejected out here. Inside of silver, really the same thing. You can see that silver would likely be the first one to show us whether or not we have any kind of breakout, and that's a breakout just simply coming back to the November 2012 highs out there, a little descending price channel that we see silver trading in. I think I may have the larger channel out here. If we take a look at I don't have the weekly out here, so I won't spend time doing that. There's the monthly trend channel. So silver's got quite a ways to go before it really breaks its downtrend. That's the downtrend that comes off of the May highs when we had silver out at 40. Well, it was really up at 49.82 back on the month of April of 2011 out there. Let's take a look at light sweet crude, see what it is doing here this morning. Just working off that oversold condition. Just some small-bodied candles. The only bullish candle that was out here was on the trading session of November 6th, but that bullish engulfing candle, no follow-through on that trading session. So all we're seeing is a sideways move in light sweet crude, and looks like it wants to then move lower out there. Bonds, the bond pits are closed today. Electronic trading is open, but if we take a look at the monthly, I believe it's open, the monthly chart out here. Here's a monthly chart taking us back into the 1983 time frame out here, you can see that bonds have nothing bullish about this chart out here. The only bullish side about this chart would be a test of that rising price channel somewhere in the 126-ish type level. If we take a look at what the monthly retracement would be out here, give me a moment to finish that. Right around, I got to blow it up, I can't really see it. Right around 125.22 looks like the 0.786 area, and likely a spike down into that area, and which would also be a test of the rising price channel. When and if bonds break this rising price channel, which goes back into the 1980s, that would be a significant break out here. Has not broken that trend line out there. That is the monthly chart. If we take a look at a daily chart out here, let's pull this back. Moment here. Continuous contract is what I'm looking at right now. You can see that little rising price channel that was in, broken with a major conviction on Friday to the downside, taking out the swing point. I believe the low swing point I'm looking at was October the 16th, not low at 131.2. So you're trading just slightly below that now. That sets up a move all the way back down to the bottom out there. Natural gas, if we take a look at natural gas, what contract do we have up here? This is the December contract as we speak. It looks like it's just trying to get up and test the bottom of the sideways consolidation that it was traveling in out here. It looks like maybe, well, I don't know if we will or we won't, but it looks like if it rejects that area, we're likely to see natural gas move down into the 331-ish level, maybe 316 or 311 area, which would be your 1.618, but I suspect it's more likely the 331 area, and that is on the natural gas contract out here. You know, Friday was a odd trading session, especially the last 30 minutes, and I'll show you what I mean by that. Let's take a look at some of the ETF structures. We could do it just simply by taking a look at the index ETFs, but let's look at some of the sectors inside of the S&P 500. Take a look at the XLF just as an example. Let me get rid of the A to B equals CD down pattern out here. The XLF that we're looking at on my screen, this shows a nice rising price channel, nice rising trend line as well coming off of the November 16th area. We did see a break of that area. That was back here on October the 8th, October the 9th, and then gapped up on October the 10th, back inside the trend line, back inside the price channel, enough to get rid of the island reversal that was out there. I'm going to actually just get rid of that because it no longer exists. And taking out that island reversal is actually a strong bullish signal versus a bearish signal. Now, what the XLF has done is create a new area of resistance. This one is active. That was created and formed by the gap down between the October 22nd candle. The low is 2104. The high of October 23rd was 2084. So it created an open window, which has been tested now twice. It was tested here once, October 29th, failed. It was tested again on October 30th, failed out there. Wide-ranging bar, most certainly a respect. You got to respect that wide-ranging bar that we had on Friday. You had volume behind the move, total of 63 million shares. That's after a downdraft on Thursday with 44 million shares. That's got to make you say, that makes me say, something to think about. Now watch this. I'll put this on a 5-minute chart out here for you, and take a look at that volume here coming in to the XLF at 355 at 4 o'clock out there. You're talking about a total of 7-8 million shares out there, all done during the last 10 minutes of trading inside of the XLF. Interestingly enough, it made a 2.6-minute expansion of a set of swing points as it got up here this morning and made just a slightly higher high, up at $20.87 out there. So you can see big volume. Still, though, if I put this on a 10-minute chart, let's just do that, get the exact number of shares out there. You're still going to have some trading take place during the closeout here, but big bar, big volume, 7.1 million shares. If I switch back to the daily chart, what this at least tells us is even if you took 7 million off of 63, you still had higher volume on the way up than you did on the way down inside of the XLF on Thursday out there. It does have to make you say, something to think about. At least it does to me out there, knowing that the XLF, one of the top 3 sectors with inside of the S&P 500. Of course, one of those other sectors, or the leading sector out here, is the XLK. Now, if we take a look at the leading sector and see what its signal was here on Friday. Let me just hit the update button. What we take a look at is Friday's move down was with 10.5 million shares, and Thursday's move down 10.5 million shares. Friday's bounce up only 8.9 million shares. And if we take a look at that same, put it on a 10-minute chart out here just to see if we see some end-of-day volume and what that actually looks like in comparison to the other bars. I don't like it when on the upper left-hand portion of my screen it says not responding, because then there we go. And you take a look at that volume there in that last 10 minutes, you had 1.4 million shares, biggest volume out there by far. So lots of strange things that were taking place on Friday. Don't know if that was short covering. You just don't know what it really was out here. Well, if you get the XLK trading above 33.91, and it, then what we can say is, well, we've got a buyer most certainly in there, and they're going to push price up to the swing point highs, is what it would appear, which would be at about the 34.10 level inside of the XLK, taking it back into the November 7th time frame out here. On the daily chart here inside the XLK key reversal trading session, so the key to be watching is going to be that 34.10 level. That gets taken out, and that is a serious move to the upside, because all kinds of bearish signals on a daily chart last week. Not the case on the weekly chart. So if you take a look at the larger trend, which one has priority, you've got to give clearance to the larger trends out there. Now, let's take a look at the XLV. Let's take a look at the health sector as well, as long as we're inside this area here. If we take a look at the XLV, it was moving down on Thursday with 6 million shares, up on Friday with 6.6 million shares. So the day where we had some significant volume to the downside, the top three sectors are actually saying, hey, what are you looking at out here? That's really what the top three sectors inside of the S&P 500, that's at least what they're communicating to me. Let's take a look at the fifth sector out there. That is the I certainly didn't mean to delete that. What were we looking at? I don't know which one I deleted, but I'll go back and I'll figure it out when I'm off the air. Let's take a look, though, at the energy sector. The energy sector, well, this one shows weakness. So if we know where there's any kind of weakness out here, most certainly the XLE is an area. It was down with 21 million shares on Thursday. Friday's bounce was with a volume of only 13 million shares out there. Ordinarily, that would be pretty good, except for the down thrust. But the weak link here, the XLE, it's only the fifth weighting structure inside of the S&P 500. So it alone can, even though it's the weakest, cannot drag the market down. It's going to need participation from the financials, from the technology sector, and from the health sector in order for the key reversal session that we saw inside of the S&P 500 as well as the SPY. In fact, let's go take a look at the SPY here as we speak, trading out of 177.30 out here. We were down with 157 million. That was on Thursday. Up with 136 million on Friday. Not exactly the light bounce, and got well past the 0.618 retracement level out there. So you do not have a B to a C of an A to B equals CD down that has formed inside of the SPYs. If anything, looks like what we've got here is a potential consolidation move out there. The consolidation taking us back into about the October 22nd level. Right now, Dow's up 10, S&P is up 1 point. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Basil Chapman has just announced that he will be hosting a one-day online master trader class. Friday, November 8th, Basil Chapman will teach you the essential fundamentals he uses when trading the market with his Chapman Wave methodology. Included in this full-day online master trader class is 1 month of Basil's daily newsletter service, The Opening Call, a $128 value, as well as a copy of his CD book introducing the Chapman Wave methodology, which usually sells for $249. Join Basil Chapman for this powerful one-day online master trader class Friday, November 8th, which will be archived if you can't attend live, where he'll give you a complete understanding of the Chapman Wave methodology and how to apply it to profitably trade any market in any time frame. For all the details and to reserve your spot while taking advantage of early bird pricing and saving $200 off the regular price, visit the front page of TFNN.com today.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow's up 26 points right now. S&P is up a couple, and talk about lead the charts, the upside. Priceline up $24 right now. That's up 2%, and Priceline looks like it's going to go ahead and take out its resistance areas out here. Little bear sash candle top of October 22nd, 1098.70. That's also a B point of at least a small A to B equals CD up. Only volume of 847,000 shares up there. Now down on Thursday with 1.3 million shares and up on Friday with 1.9 million shares out there. So it should be able to. So moved in that swing point with volume. The small A to B equals CD inside of Priceline. That's going to take it up into the 1147, more likely 1181-ish area out there. So Priceline looks like it's going to be able to conquer the B point of an A to B equals CD up. That is at 1098.70. It's trading right now at 1094. Again, volume on that B point, 847,000 shares already this morning. 169,000 shares. So it's going to have the volume today to take that out without any problem. That to the upside. To the downside out here, Carl Icahn Enterprises, IEP is the ticker symbol. Let's go see what this equity here looks like. IEP is the ticker symbol. Big gold key reversal session in this as well. That was 1, 2, 3 trading sessions ago. That was on Thursday. Let me just refresh the screen here, make sure I got everything. Big key reversal. That's on the trading session of November the 7th out there. Down with 677,000 million shares. A light bounce on Friday. That's what we expect. That's what I expected to see inside of the market. Set up a B to a C of an A to B equals CD down, much like in the case of Icon Enterprises, up with 416,000 shares, down with 677. That would be more like it. We didn't see that type of move in Friday's action out there. Now, what else do we have moving out here? What should we be paying attention to? That's probably the question I'm going to go ahead and answer for you. Let's go take a look and see what the New York Stock Exchange is doing here this morning. Right now, we've got the NYSE. It is trading out at 1047.79. That puts it up this morning here 15 points, and still net advancing issues. See, there's some real trouble here, and that is when I take a look at the broad index. It's still in bearish territory. We need something like 860 or so net advancing issues in order to get into bullish territory. And Friday's move, the New York Stock Exchange was up over 100 points, and net advancing issues were meager, 300, 400, something like that. So it's telling you that underneath the covers out there, that there are some problems, and so. Yeah, we've got some divergence for sure. New York Stock Exchange says that the bears have a firm grasp on this market here. You wouldn't know it by taking a look at Friday's action and the action here this morning. But at some point in time, as I was pointing out, that Euro Japanese yen currency pair, it's really gotten itself into an extreme overbought condition. I just don't know if that rubber band's going to snap or whether it's just simply going to pull back a bit. So New York Stock Exchange, you want to be paying attention to that. It's going to need a lot more help in the way of advancing issues and then get to bullish territory out there. So, folks, if you are off to start your Monday, again, all of you veterans out there, thank you so much for all the service that you provide to each and every one of us. We can't thank you enough for everything that you do. Thanks so much for being here with TFNN, folks. Have a great Monday if you're off to start your day. Otherwise, we'll see you in just a few. Take care, folks. What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.